Okay, guys, good evening. 6:48 p.m. on Wednesday, July 10th, 2019. Hope everybody's doing well. I just want to make a quick follow-up here on the video I made yesterday regarding the two main events from today, which was the Bank of Canada rate decision and press conference, and also Jerome Powell, the Federal Reserve Chairman's first day of testimony in front of the U.S. House of Representatives. He will have another tomorrow in front of the United States Senate Committee, Financial Services Committee, but don't expect anything different to come out of that. He's just going to reiterate the same thing he said today. He'll just be asked 20 different ways. So first on the Bank of Canada. So as expected, they did not change their rates, which was fully expected. But in terms of the statement and the press conference afterwards, I'm not going to read all these bullet points. This is on Forex Live. You should definitely go and look at it. But the bank, I would, the market is basically saying that they put a little bit of a dovish tilt on the Bank of Canada. This is on my Forex source here, but Bank of Canada maintain rates, but also underline a neutral bias via omitting any reference to future policy, again, and stress data contingent, especially the performance of the energy sector. However, the accompanying statement also noted increased downside threats to the Canadian economy via global tensions. Okay, so they were a little bit dovish in terms of saying, hey, things are pretty good right now, but we're still concerned about global trade and tensions, and also worrying about things kind of slowing down. They're feeling that their GDP will be reduced by some of these things going forward. But they did note that the labor market is healthy, and that their housing market is good. So basically, they took a very neutral stance, basically saying here in bold, until the headwinds show signs of getting worse or better, we're content with leaving where things are. Current rates are helping to sustain expansion. So and this was an interesting, he declined to comment on if rates were more likely to rise than be cut. He just took that off the table entirely. So I would say, a dovish to neutral stance by the Bank of Canada. So, the Canadian dollar initially came under pressure, when the statement came out, but it's pared back a lot of that. And, I don't know. The Canadian dollar can be really tricky. Sometimes I find it a little frustrating at times trying to trade this, whether it's technical or fundamental, because I don't really see a lot in here. I guess it's a little bit dovish, a little bit some concerns, but it wasn't overly dovish in my opinion. So we'll see. The other, and this is the same with the U.S. dollar. Summertime is a tough time of year to get to sustain trends, because the trading volume and liquidity is a lot lower in the summer. A lot of the large banks and hedge fund traders and the large traders that actually move the market, are on vacations this time of year. So it is really hard to keep, get trends going and sustained with any real fervor. You might get some moves during the London session, the early New York session, then things kind of die out. And of course, this news came out during the late London session and kind of mid-morning New York, and so you very quickly saw whatever moves there were kind of died out either way. So is that a measure of just the uncertainty in the market, or is that the low liquidity in the market and trading volume, or both? I don't know. I guess we'll see. Maybe the London session tomorrow might bring a little bit more definitive direction to the market. But definitely, if you didn't see it live, you should go and read some of this commentary, and come to your own judgment. So, in terms of the dollar, Jerome Powell spoke in front of the U.S. House of Representatives right about the same time that the Canadian data came out, and so basically. Theirs was probably more dovish than the Bank of Canada, basically saying there's still a lot of uncertainties. They still worry about inflation weakening or inflation being more persistent. Powell said the Fed does not want to get on a road to long periods of low inflation, which means, they're going to maybe probably, I take that as the bias is they want to cut rates and push inflation higher. Fed has no evidence for calling this a, quote, hot labor market. Basically there was some upgrading for the Atlanta Fed of increasing GDP going forward, but this was an interesting one too. Wages rising at a healthy level, but they expected more. So, because wages are a very big determinant. Anyways, guys, and this was another one here too. Sorry, I'm just scanning back through these. Many Fed officials saw a stronger rate cut case amid rising risk. So the bottom line is, guys, I don't think that anything's changed as far as the dollar goes. They probably are going to cut rates in a couple of weeks, the end of the month, as expected. And I think they probably had more of a dovish tilt in terms of what they might do going forward. And here we are back on Forex Source. Powell reiterated that appropriate policy action will be taken to keep U.S. growth sustained at a robust pace. However, the catalyst for broad dollar selling was a further dovish shift in the language regarding inflation, as he warned that prices may be soft for longer than expected versus a transitory view prior to the June meeting. So that's important, guys. So basically he's saying that they expect inflation to be down probably for a longer period versus just a short-term period, the way they originally were thinking. So that's more of a dovish tilt. So I think Powell is more dovish than Governor Paloz in the Bank of Canada. So, but again, the same thing kind of happened. The dollar initially sold off, kind of whipsawed around actually a little bit. In the end, it started going down, but then it kind of sputtered out and didn't really do much the rest of the day. So we'll see what happens from here, guys. But that's kind of where we're at. So I'm not going to spend a lot of time on the charts. This is the Canadian yen on the daily chart. So here we are. This was the candle from Wednesday session. We're into the new session now, this little small candle. So you can kind of see here, go to the 12-hour. This is where it spiked down. It's just kind of sitting there really doing nothing. Canadian Swiss, kind of the same thing. It's it went down, kind of snapped right back to about where it started. Here's the euro dollar is trying to go up. This is where it went up on the Fed. You can see it's sitting right at the 200-day moving average. So we'll see where it goes from here. I think the dollar shorts are probably more reliable right now than Canadian shorts, but we'll see. U.S. Swissy, same thing. This is where it went down on the news during the press conference, and we're a little bit lower than that currently. And so, so we'll see where things go from here. But like I said, guys, I think from just the trade reliability, that shorts on the U.S. dollar at this point look more reliable than longs than shorts on the Canadian dollar. And but we'll have to see where things go. And on the U.S. Swiss daily, we are below the 200-day moving average. So, and we did come up on the alligator here and just kind of touch the top line and seem to have come back down. So we'll see. And the oscillator is still showing that the downtrend's probably not over. When we made this low here, the oscillator made a new low and then corrected up. So this kind of does look a little bit like an ABC correction. So we'll see where this goes. But, hopefully, like I said, we'll get a little bit more direction during the London session tomorrow, either way on both currencies. But at the moment, it's really not a lot. The U.S. Canadian, I said yesterday, might have been a good option to trade until we get some really clear direction on what these are going to do. I'm certainly not going to trade the U.S. Canadian. If it turns out, like I said, that the Canadian dollar begins to recover and come back and the U.S. dollar goes down, then obviously the U.S. Canadian short would be a good trade. But otherwise, if they kind of stay both dovish, if the Canadian does continue down and the U.S. dollar also continues down, then obviously that would not be a good pair to trade, because you're going to have two weak currencies. Is not what you want. You want to take currencies that are going in the opposite direction and match those up. So So I did not take any U.S. Canadian trade either way, and I won't be until I might not either way, but I certainly won't until I kind of see what the market's going to do with both of these. And I think tomorrow London session will be the first time to get a really feel for that when there's a little bit more trading volume in the market than we have right now, or that we had this afternoon. And again, Powell will be speaking again tomorrow to the Senate, but again, don't expect anything different than what we heard today. So I don't anticipate we'll really get much more direction other than what we got today. So again, guys, a little bit more dovish on the U.S. dollar. Yeah, maybe neutral to a little bit dovish on the Canadian dollar, but we'll see what that actually equates to, especially for the Canadian dollar. I'm not convinced that the Canadian dollar is going to sell off because I don't really think it was a bad report, although the press seems to think it was more dovish than I do just reading it. So we'll see. Anyways, guys, that's it. I'll leave it there. Have a good night. If you like the video, please like it. Please share it. Please leave your thoughts and comments below. Subscribe to the channel if you haven't already, and I appreciate it. And we'll talk to everybody very soon. Thanks.